Renew Holdings is another stock we haven't talked about ever. It's another UK one as well. And basically, what they do is infrastructure maintenance in the UK for, largely speaking, government infrastructure. So they include rails, they include telecom stuff, they include energy things, they include water. And the way this kind of industry works, as far as I can see, these sort of regulated operations, they work in what's called a kind of control period of a period of about 5 years where they decide, right, or their regulator, whoever's in charge of these things, figures out, okay, here's what's going to happen over the next 5 years. You're going to spend this much, and you're going to try and improve things by this much, and here's the amount you can spend on it, because regulated utilities, whether they're water utilities or electric utilities and so on, are typically allowed to spend a certain amount and earn a return on it. And their job within that is to try and, well, make sure the water works and so on. And water is a good example of an industry that, as far as I can tell in the UK, pretty much everybody hates because they don't have a way around it. Water companies, they think, have been kind of cutting corners quite a bit here, and when they haven't been cutting corners, they've been making loads of money, and that seems to quite rightly annoy a lot of people, but which is one reason I'm not touching water stocks, despite the very obvious benefit of extremely stable demand. But the people who service the water utilities might be slightly more interesting. We will see. They also service a bunch of other things that we'll get to as well. So Renew, 669 million with an M market cap, PE of about 15. Revenues in the first half of the year, which is their most recent set of reports, were up about 13% to 570 million. These are the 6-month things. Op income was up to 32 million. Oh, sorry, it was about flat at 32 million, and net debt was about flat at 11.8 million. The reason they've got any debt at all is because they've had an acquisition recently-ish, which appears to be sort of largely straightforward. Like I say, specialists in infrastructure maintenance rather than infrastructure expansion. So they're not building railway lines and those sorts of things. They are busy working out how to do maintenance on them. And on the subject of railway lines, I read this and I thought this has to be ironic, but it turns out it's not. Rail is a division that's been struggling the most recently, and they're in what's called Control Period 7. Control Period 7 is the 5-year period that began April 2024. With various bits of kind of contracted work and proposals for how they will improve things and do maintenance on them. Maintenance is generally non-negotiable for these companies. They don't have a choice about doing it. They are entitled to earn a return on doing it, but they can't opt out of doing things like rail maintenance. But in an entirely non-ironic way, maintenance work on railroads has been delayed for quite a while, and that's showing up in their comps and their kind of rail unit as far as they break them out, which they don't super tell you exactly how much of their overall revenues come from each part of this. They lump their kind of servicing stuff into one unit, which accounts for 99% of sales, which is not terribly helpful. But they're sticking by the thought here that, look, the work they're contracted to do has been delayed getting started, but it has to happen. It's regulatory requirement. It's coming sooner or later, and they can push it further down the line if they want here, but this is not optional. So while there's still plenty of spending going on in terms of improving and maintaining rail infrastructure, it has to go somewhere, and Renew is at least a candidate in this. I mean, I'm reluctant to, or I want to be careful not to, I think, present this as they have some sort of monopoly on UK maintenance stuff. That would be quite a nice position to be in, to be like the government-approved contractor for these things, but that's not their position. There's loads of construction firms like Balfour Beatty and Kier Group and Costain and Morgan Sindall, and they all do some stuff here, but Renew gets its kind of distinctiveness from being a specialist in maintenance rather than building things out or electrifying things or whatever. They're very much maintenance experts and maintenance-focused teams. So rail has been the kind of weak point in their operations recently, and I guess the more positive side of this has been water. So water has now entered AMP8 control period, which began in April of this year. And Ofwat has decided, right, we need a significant investment in UK infrastructure for water, I think rightly, to be fair. But what they have committed or suggested is 104 billion worth of stuff, which is 77% higher than it was on AMP7, which was the 5 years before that, the previous AMP or control period, basically. Renew should be in a decent position here. They're a preferred partner to 10 of the big 12 water companies. I'm not sure I can name 12 big water companies, but they have 13 kind of partnerships, or I guess arrangements, where they can essentially bid for stuff without and be pre-approved as a kind of contractor to go carry out work that needs carrying out. Um, that's pretty much what I got on Renew here. It's sort of interesting, and you can see in general kind of capital getting committed into UK infrastructure. It needs investment, and it probably needs more than just maintenance, to be honest. But it feels like maintenance is, in a certain way, non-negotiable. We talked about Diploma previously and their focus on components and things that break rather than big expansion, new machinery stuff. So this is kind of OPEX rather than CAPEX, if you want to think about it along those sorts of lines. This is stuff that will happen whether or not we get into building east-west rail, although east-west rail will need maintaining, so that will help, or whether we get around to electrifying whichever bits of TransPennine it is that they're busy trying to do. So my sense is that this might be kind of reasonably resilient, or it ought to be anyway. Sooner or later, stuff has to get spent here, and if they're contracted to do it, then they will be that money will show up one way or another. On the long term, I guess there are two sorts of risks. One is competition from the supply side, and the other is regulation. Demand, I suspect, is unlikely to go away, but maybe it could. Steve, what do you think about Renew?
A couple of things I've spotted, Steve, when I was reading through the report. So, just on the AMP8, there's about 10 billion of that fund going to storm overflows, which is something Renew can bid for. There's triple the replacement rate of mains pipework and reduce leakage. They want to reduce leakage, by about 13%, which again is something they can bid for. There's 6% committed to reduced nutrient pollution, which is something they'll bid for. 4 billion committed to boosting water supply. And 2 billion increase to biodiversity and reduce greenhouse gas emissions as well, which are things that they'll be able to try and bid for. They've been bidding for projects in the aviation sector. They've got I saw that they got places at Stansted, Manchester, and East Midlands as well. So they've now got contracts in that kind of area. They're involved in the nuclear side as well. There's about 4 billion committed to decommissioning program at Sellafield, which is something that they do as sort of a civil nuclear business. But when you read through this report, it's kind of clear what they're trying to do, Steve. They're trying to basically move from what was essentially a specialist building firm, essentially, with some maintenance on the side, to being a more maintenance and specialist engineering kind of firm. So the last sort of specialist building business they had was a business called Walter Lilly, which they've disposed of on it looks like October 2024 as well, and that was the last thing they owned in that sector. So they've completely changed focus over the last year, and it looks like basically they're there to hoover up some of the government spending and increases in government spending that we've seen over the last few budgets and mini budgets and spending reviews and all the other things that are dressed up as budgets that aren't budgets, Steve. So yeah, I think it looks pretty interesting here. I'm just thinking out loud about firms. One of the things they do kind of like to do, and it's one of the things the councils did pretty quickly when councils stopped building homes, was essentially shuffle off all of their maintenance people. They shuffled it off to various other companies to go and do it, and it's evidently something that you can see the energy and water companies do as well. I had a recent experience with Yorkshire Water, because my outside tap had gone missing, and it wasn't where Yorkshire Water said it was. And the fella turned up and he dug a big hole out the front of my house, and then he said, "Oh, there's your tap, look." And I said, "Oh, great, thanks." And then he was just about to drive off, and I said, "Well, are you going to fill the hole back in?" And he said, "Oh, I'm not the guy who fills holes." And I just think that's kind of the experience I was used to with the council as well, where hopefully Renew offer a more sort of holistic service. But yeah, I mean, this report is well worth a read for people. If you think that the kind of maintenance market is something that you potentially, when specifically interested in, I would urge you to take another look, because Steve says OPEX, but I would say OPEX and CAPEX actually, rather interestingly, in this business, because there is some new stuff and there is some renewal in there as well. And it looks, yeah, it's a very interesting business. On the AIM as well, Steve, so no stamp duty on your purchases. I didn't know this company existed, so yes, it's one to definitely bob onto that watch list, Steve. We've got we've got to do a review of the BritBox soon, Steve. It's coming up to its 6 month life, and I'll fight you to get this one somewhere near the watch list.
Interesting. Yeah, you might not have to. Rachel Reeves used the word renew quite a lot in her most recent budget alike thing, which was she talked a lot about renewing Britain, and the stock did absolutely nothing in response, which was probably about right, to be honest. Not because it was a bad statement, because most of it wasn't really to do with what this company does. But where I look at this, I'm always sort of in two minds on these, and I feel like at the right price, this could be interesting, but a lot will come down to price. So I feel a little bit about this the way I feel about National Grid, and a lot of people point out, rightly, that National Grid doesn't have any particular competitors, because basically you can't compete with National Grid. You can't go and build your own infrastructure. Even if you had your own enough cash to do it, you just can't get permission to go and build all the transmission infrastructure out. And that means that, great, it's pretty well protected from competition. And that's true. Trouble is, it's also regulated, and it's not very well protected from that. And if your business profits start going down because of a regulator versus another business, it probably doesn't really matter very much which one it is. And I think there's always kind of biggish regulatory risk here, and that replaces competition to some extent. Renew has a little bit of both in these cases. It doesn't have the same protection from competition, and it is up against some players that are bigger than it in these areas. But it is focused, and if you think this market is growing and at a reasonable rate, which it does seem to be at the time being, at least in the water side of things, and to some extent with rail as well, as and when that shows up, this could be, I guess, it's not super demandingly priced at the moment, with a small amount of debt on its balance sheet at the moment, and a PE ratio that is okay at 15 or so. So, yeah, one for the watch list, maybe at the right price, maybe as part of a diversified thing, maybe as part of a BritBox. Don't know. Feel like we've got a lot of BritBox candidates from today, though, Steve. So when we get to the review of that, we will have a lot to think about, including where we reinvest all these mighty dividends we've come up with. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.